Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to our weekly analysis of the currency markets, guys. Bit of a surprise last week. I think it was Friday. With this move down here on the dollar, guys. I was expecting this to continue pushing up. With this possibly being a fifth wave. Let me just go out a little bit so we can see this whole diagonal coming up here. We were looking at this and kind of going, is that a 1, 2, 3 to there, 4 to there, and then one more up, maybe up into that zone, and then we'd get a transition period before the dollar started to drop. And at that point, that would be whenever the ECB started to talk about tightening, maybe increasing, jacking up their interest rates, etc., guys. But what happened on Friday was, and remember, we'd had that move up because we were in this flat for quite a few weeks. And I had said, guys, wait for it to break the bottom and then we'll get a trade back up again, which is what we got. And then when we got to here, if we go, a bit closer in, as we always do, when we get up to here, I said, right, guys, either protect yourself by putting your stop to zero, take your profit, or if you're not in it, wait for a correction, and then as it starts to go up again, we'll catch the next wave up. But what happened then on Friday was we got down to here, and I was thinking, this could be the bottom, and it was either Thursday or Friday, guys, can't remember. ECB came out and they were hawkish, and the dollar dropped, basically because the euro took a hike up. But it was only on hawkish talk, guys. It wasn't on anything they actually did or said. Or obviously something they said, but it wasn't on anything they did. They were a little bit more hawkish. And off it went. The big question now is that now the top? Is that it done? Is that the dollar done? And we're now on some sort of route down? Or is this still a pullback before we get one more up and then we go? And that's the thing, obviously, that I don't know at the minute. I'd be very wary of trading it short without another structure in here. Let's say this were to, maybe it goes 1, 2, 3, 4, 5 at thirds, but a bit dodgy because that first one was so long. So I'm thinking more it's a 1, 2, 3, and then we start to push on up again from here. The difficulty is that these things don't always meet what Elliot's description is, and the times we need to believe in it is the times that it does, do what we expected to do or what Elliot said it would do. And when it's not doing that or we're not sure, then you have to leave it alone, guys. So I can remember this one and being surprised by this way back, because we decided it was going up. We were looking for a pullback here and then the next leg up. And when we got down into here somewhere and we got this, I tried to trade that long, guys. But we went through this. We got that move down, which was horrible. You get stopped out. And then we went through this. When we got to here, we realized we're in an ending diagonal. We would have looked down here for the confirmation of it. I think there it is, there, and there. And then off it went and it started going long. And then I tried to trade it long again here, but I got fed up with it and then bang, off it went and I missed it. Just being honest, guys. And this is the thing, is that you got to learn to be patient with these things. But I got a little bit fed up and I closed it for I think I hit my stop loss on a 0. And then 2 or 3 days later, it took off and I missed the move up. But that was the move up that we were looking for over here. So we still had the direction correct. It was just the timing off it was wrong. And getting the timing right is tough, guys. So you need to be patient with these things, so long as you're trading in the right direction. If the direction was wrong, in other words, either here or here, if I had got into this and it turned out that this was the start of a drop, then I could have been in a lot of trouble. And that's why you need your stop losses, guys. But we weren't incorrect in that. that was the direction it was going in, and that's the direction we'd called it in. Now, it becomes a little bit more problematic once a structure has developed, it's well developed. Then it becomes problematic about calling the next leg up, because you start to say, well, we're now expecting this structure to finish, and you're trying to squeeze the last bit out of it, and that's where you can often get things wrong. For example, if you were trading something that come up in an impulse like that, and it's around there somewhere, you're kind of going, well, you should have a fifth wave that comes further up. But to be honest, once that finishes, you're then looking for a correction, at least back down into the fourth wave. And sometimes if that's the turning point, that's your new trend, and off you go. So once you get up here, once the thing's well developed, it starts to become problematic of calling it, continuing to call the trend, guys. And you need to be careful. Now, that's obviously an impulse. This is a diagonal we're in here, but it's the same. It's the same thing. It's well developed. Now, can it continue to go up? Yes, it can, and I think it will. But you're getting to the point where is that the finish, or are we going to get one more up? Because at some point, I know it will drop. And therefore, it just gets a little bit more difficult, guys, because this could be the start of the drop. I don't think it is. I think that was an overreaction, because they're still a long way from actually doing anything. And the Fed next month will hike, or whenever the next Fed interest rate day is. I don't know where it is off the top of my head, guys. But whenever that is, I think we could well see a hike, which means that you'll get a reaction, and the dollar will push along with it, guys. So the story's not over yet. The cycle is we're we're starting to get out of phase with one another, and the different world economies, guys, and our different national economies within the world. And that's good for currency trading, because it's those differentials that we can get our opportunities from. It's been difficult the last few years because everyone was a race to zero. Everybody was cutting interest rates. Everybody was quantitative easing, supplying money into the economy to keep it going. So finding a differential was difficult. But we're now starting to see some differentials. And I still think there's more upside to the dollar. If it gets up into here, I'll certainly look for it to drop. But my problem is this structure over yet? And I was looking at it at the weekend, and I was kind of going, well, I'm saying it's a diagonal, therefore it should be 5 waves, right? But then you look at it differently, and you kind of go, well, that's a 3, and that's a 3, and that's a 3, so that can't be a 1. And then that's an impulse actually down, impulse ending diagonal. That's an impulse down, and then this just keeps going up, and then you could possibly say, I think I got a 5 out of this. 1, 2, 1, 2, 3, 4, 5, 4, and then a fifth wave. So there should be a fifth wave even within this, if I'm right. But then I'm calling that a 4, and the 2 was in there somewhere, so that's not right either. That's not right either. I'll have another look at that, and we'll talk about it next week, guys. But I would be wary of trying to trade that short. But we'll give it a few days and see if that alarm goes off. And if that alarm goes off, then for me, that would be a signal that we're going to get another leg up. That might be right, actually, because that is not necessarily the equivalent of that. But that was what I was looking at initially, and I was kind of going, that's a 1, 2, 3 to there, 4 to there, and then a fifth wave. The difficulty is that is a wave up, but it could be truncated, guys. It could be, well, that's your fifth, and that's you done. But then that wave there on its own, let me clean it up. Now, the reason I do it like this, guys, is to show you the thought process as we go through. A lot of other people make up their mind and then come and tell you what they think. but there's doubts and there's ifs and buts that go on in the background. They just don't show it to you guys. So I'm trying to help you learn and understand that it's okay to have ifs and buts. It's okay not to know, because if you admit that you don't know, then you're not going to get it as wrong as often as you would do if you didn't admit it, guys. And I don't want to give any of you a bum steer. So if that's a 1 and that's a 2 and that's a 3 to there and that's the fourth wave, I would imagine that this would be a bigger structure. It can't just be that one. That's too small a wave, because it has to be the equivalent of that, guys. So I think there's more to this to come. This little structure here needs more. Maybe there's a push up. Maybe it turns into some sort of ending diagonal. Maybe it pushes up, pulls back as a little diagonal. We creep up into here, and then we start. It's a few months down the road, and then the Eurozone starts to actually make some moves. And by that stage, the dollar is priced in. The other thing is, remember, the dollar is a safe haven, guys. So if this drawdown that we're getting in the stock markets, if it continues, you will see a safe haven bet on the dollar as well. So I think there's still some more upside to the dollar, but I'd be wary today of jumping into anything. But do keep an eye on it. Let's see how it goes. Let's see if this, let's look on the 1 hour time scale. See, that's possibly a 1, 2, 3, maybe a 4 and a 5. But if that's the third wave, then this has to be very short, even if it breaks that bottom. And then you should get something in here, and maybe it goes again. But it doesn't have to, guys. So what I would do is wait for whatever this is to come up and hit our alarm. Let's get the alarm a bit tighter, guys. Wait for that alarm to go off and see what we get in here. And obviously you're listening to Bloomberg and you're reading and you're getting information. And if they start getting bullish on the dollar again, then somewhere in here we start to look to trade the dollar up again, guys. Most people will be trading it short. Sentiment at the minute will probably be short, but I don't run with sentiment, guys. I get the feeling. Now, so let's say I'm wrong. What do we do? Well, we shouldn't be in it in the first place. But secondly, if you are, your stop losses should protect you. But thirdly, if I'm wrong, then you're saying, well, hold on, we want to trade it down if this is the turn. Well, then it comes down. At some point, it will pull back. It will correct that move whenever it finishes. And at that point, we'll say, hold on, that's it. That's the top for the dollar. We're away. And then from in here, we'll start trading the euro long and the dollar short, guys. But that's not where we are at the minute. That's not where I am at the minute. If any of you have more information or you believe, something else, then fair enough. But this is how I trade, guys. At the moment, I don't know. So I'll be staying away from it. So what does that then mean? Hold on. Just a quick look at the yen while we're here. It's still in this structure. It's dropped there. It's pulled back. Unless we get a continuation of the drop of the stock market, this should continue to drop, guys. Okay. Euro dollar. Well, there was the big move up the other day. It's come into that level. I'm looking for this to slowly but surely start to drop, guys. Not to the extent that it would jump into short there, because if I'm wrong, then we'd be in trouble. But if this continues over the next week or so and continues to drop, and I get a direction in the dollar, then that possibly for me would be a trade down. We got that one okay, because when we were here, I said, listen, this is going to continue and it will drop. Now, obviously, I didn't think it would drop that quickly. I thought it would just pull back and drop. Sorry. I'm looking at this now. So the whole way through here, we were looking to trade it down. We got it. And then all this talk about the euro came back in and it's pulled it back up. But I don't think this is over yet, guys. Maybe this is let's go back to DXY. Just had a thought here, guys. Remember I said it could come up into this zone and then it'll run flat for a while and then it'll start to drop. Maybe that's the zone we're in. Maybe we're in it now. Maybe this ends up bouncing back and forward for a few months and then it goes. So maybe this is the top of the dollar, but not so you would want to trade it short there, in my opinion, at the moment. Maybe it ends up bouncing back and forward for a while, guys. Like that, only maybe bigger on a higher time scale or with more magnitude. So it runs flat from here and then it goes. So that's something to think about, but that would still give us a trade back up again if that's going to be true, which means that this then would run flat here. So I think we'll either run flat here or we might have another push in the dollar before it comes back in and runs flat here somewhere, guys. Okay, we'll work on that. We'll develop that idea. Pound. Well, the pound are they're hiking already, but there are other downsides to the pound because of the UK economy, because of Brexit. That still hasn't really, been valued in completely yet. Post Brexit, as it were, what damage has been done to the economy, and I do think the UK will do all right down the road. But we're what happened was as we get into Brexit properly, it's now the law, it's full on, everything's being implemented. Then we hit COVID, so Brexit was forgotten about. But as we're starting to come out of COVID, Brexit's going to come back into the story again as we see what difficulties the UK economy has with its reduced trade with the continent, or more expensive trade with the continent. Pound USD getting a nice little pullback there. I was looking for this to drop. That move came as a result of the dollar dropping against the euro. But I still think it could be something down there, guys. But just be careful. We'll look to see when the interest rate decisions are, because if you buy it in the wrong day. Aussie US, see, that's a pullback in the Aussie as well because of the dollar. What I was looking for here, you can see what I was saying there, guys. Let's go to clean this up. When we got this, which was the breakout of that, and we started this, it's 5 waves, but I'm not, well, yeah, it's 5 waves. That's probably about the same size as that, so we'll get away with that. It's 5 waves, it's a pullback. Maybe there's a bit more like that, and then it goes again. But that will all depend on making sure the dollar is going to continue to rise, or at least come back up against the euro a little bit, guys. And it's the same with this. When we were there, we said we're looking for a pullback and then the trade will be short. So possibly that's still a trade on there, guys. Might get a little bit more complicated, but it's same with this. We were looking for a pullback. Oh no, hold on. This is the other way around. Remember, dollars at the start. So we were looking for this to go long. I'd be a little bit more wary of this one because of the whole oil price situation, and possibly if the dollar has hit its peak, is it going to start to drop? I don't think it's hit its peak, guys, but I wouldn't be trading that one just at the minute. Swiss, yet again, we were looking for this to push on up. What we said back here by the looks of things is when we got to here, I probably said, listen, guys, I would look for it to drop. That's why we have the alarm line like that. But don't be surprised if it continues to run like that. It didn't run. We got the drop. But is that it? Is it over? This little corrective phase here may have a bit more in it, guys, but I still think the trade's that way. And the more I look at this, the more I'm, convinced isn't the right word, but the more I'm leaning towards more long for the dollar. What did I just delete there? Oh yeah, it was that little target. And yet again, we've had this pullback that looks like it wants to drop one more time. But what to say back over here, when we got to there, I said, guys, we're looking for a correction of that move because it was too much, too quick, too fast. It needs to correct. We got a correction. Let's, I should just use that. Almost 78% correction, guys. Is that trade, or are we going to get that trade? And maybe it just comes back up to there, but it's a half decent looking trade. I just don't like the look of that at the minute. It just looks like it wants to drop one more time, and then maybe we get the push back up to there. You could always take it and put your stop loss there, guys. It would come down, or you could maybe put your stop loss there. Obviously, low leverage if you're going to go that far. Put your stop loss there. Maybe it gives you one more, and then we get the trade up. US yen. Now, if that yen's going to continue to drop, then this will continue to push up. That was the correction. It's pushed back up. It's already come back up, guys. Now, of course, this could end up, bouncing along like that. But I think that's the trend that's going to continue like that. Look at how it moved there, guys. So it's all right drawing these things and saying it's going to go to there. But, when we were here, I probably drew an arrow and said, listen, it's going to come back up to there. But look at how it got there, guys. And look how long you had to wait before you got the impulse. So that you need the patience. You need to have patience when you're doing these things. Have your stop loss. Put your money on it. Have your stop loss. If your stop loss gets hit, fair be, there you go. And if it doesn't get hit, then be patient and let it run, because eventually it will give you your trade, guys. Gold, bouncing around all over the place at the minute, guys. It's become quite difficult to predict. The one thing we will say is that that drop was obviously to do with the price of the value of the dollar dropping, because you needed more dollar. Oh no, that should have pushed the price of gold up, because you needed more dollars to buy the same amount of gold. So sorry, I've got that the wrong way around. Not entirely sure why that dropped then, but the one thing we do know is that cryptocurrencies aren't being used as a safe haven. The talk all last year was that Bitcoin was the new gold, etc., etc. And to an extent, there are people who are holding on to Bitcoin, but it's been dropping, and we're going to look at it in a minute. Oh, it's had a little recovery over the last 24 hours, guys. Let's go out into the 4 hours. So it's starting to get a bit of recovery. Is that the bottom? And what did I say? For any of you who have been listening for the last lot of weeks and months, what did I draw when we were up here? Let's just take that off. When we got this, I drew that and put those two lines in. And I said, when Bitcoin comes down into this sort of level, and possibly we're moving up in a diagonal like that, actually it would have been like that, I would buy Bitcoin down around there. Now, any of you have been listening to me, or if you want to go back to November, December time, you'll see that I'd drawn that, and I said when it gets down into there, that's when to think about buying it. Does that mean that this is definitely going to go up? No. It just means that this is a level at which, if you're prepared to buy Bitcoin and hold on to it, you might get lucky and it goes quickly over the next few months, or you might be unlucky and it drops a little bit from here. But at this sort of level, if you believe that Bitcoin's going to 100,000 or above, which there are people that say it's going to go further than that, then this was a good value to buy it at, guys. Not Tommy jumping in and out, but to buy at. And if it dropped further, let's say you did buy in there the other week, and if it dropped from here, then either you let your stop loss hit out for a zero and then you buy again down here, or you just add to your position as it drops if you believe that it's going to come back up. I do believe it's going to come back up. I've learned an awful lot more about it over the last year or so than I knew previous to that. And I think it will come back up. And this might be it. This might be the start of it, guys. I was in it. I bought in here somewhere. I do this with Bitcoin. I'm a chicken with Bitcoin. Because if I get it wrong, it ruins the statistics on that eToro account, guys, and they're already a mess anyway with everything dropping over the last few months. But so I chickened out of this. So I was in here and I was up, and then it come off a little bit and it come off more. And when it got back down to zero, I got out of it. And then I missed that, and I was happy that it got out of it, but I didn't buy back in again, guys. And obviously it's coming back up. If it had stayed in, it would have been back breaking even. If it had got out as I did and bought back in, it would have been up making money now with a new stop loss there. So if it goes again, then I'm still okay. But I'm not in it, and I'm not going to get in it. Not on the eToro account, guys. I'll get in it on a Coinbase account, which I don't talk about. But I did get into a lot of cryptocurrency, and then it drew me down, and it was ruining the statistics. And I had said the whole last year, I'm not going to trade cryptocurrency on this eToro account because it will ruin the statistics if it goes wrong. And I end up a day I got into it and I ruined my statistics, guys. So just going to have to spend the year getting those right again. But this could be the bottom of Bitcoin, guys. And it could now end up, you see how these things move. It could end up over the next lot of weeks and months continuing to go on up. And if you look back in 3 or 4 years' time, it could be that was the bottom. And you're now way up here somewhere. And you're going, wow, I got in at 35,000 or 37,000 or whatever it was. And you think you've done a great thing. But if you don't get into it now and you're sitting there in a while's time, you'll be looking back and going, the same as we all did when it was running here last year, the year before, 2020, down at 7,000, and everyone had forgotten about it. Like, even there, you could have bought it at 4,000, guys, and it ended up within a year at 64,000, and then it finally peaked out there at 68,000 from $4,000 a year before, guys. So, and it had been a lot higher than that. So that was a time to buy if you're brave, and then be patient and hold on to it. Well, this could be the next drawdown. Because there's so much interest in it, I didn't think it would drop. And of course, it could still do, but I didn't think it would drop away down to where it had been before, because there's institutions in it now, there's governments involved in it now, it's got a lot more exposure now than it had, and therefore coming down to there I thought was a great price, and I'm now talking myself back into buying it. But I'm not bad on eToro, folks. Okay, ETH. Sorry, let's just go back to silver because we started that conversation on gold. I think, listen, do you remember we were here and I was looking for silver for one more down on this fifth wave? I was looking for it to come down into there, and I said from there that'd be a great price, maybe below $20 would be a great price to buy it. But we got to there and it came off it again. It's come back down again, guys. $22, $22.80. If you're going to hold it for a long time, guys, this could be a great price to buy silver at. But not to trade, not to jump in now and next week, get out of it again. Because remember, I got into it up there, which with hindsight was daft. But the reason I got into it back there was everyone was talking about a rotation. They were talking about the stock market starting to drop, and a rotation out of growth stocks into safer havens, into value stocks and into maybe gold, silver, things like that. And they were talking about that away back over here. That's why I bought into it, and I bought into gold back over there, guys. And then that's nearly a year ago, but it's now happening. We're now seeing the rotation. You're seeing the stock markets haven't dropped as much as they could have done, but whenever you look at individual stocks, you look at your not so much Tesla, but I'm just trying to think off the top of my head. Your Neos and your call the Alibabas and Teledoc and Roku and all those, they're down 67, 80%, some of them, guys, from last year. And yet the stock markets have continued to either climb or at least go flat. So there has been a rotation, not money out of the market, but from one sector of the market into another sector of the market, guys. And that rotation has happened over the last 2 or 3 months, not a year ago whenever I was looking for it. Having said that, I'm not going to sell my silver for, at a loss. I'll hang on to it. And if we get a wee push up here, I'll maybe just take a break even. Okay. Ethereum will be doing exactly the same as what Bitcoin's doing, following the same path. And that may be the start of the push up. And there again, we drew these. We drew this channel. Oops. It's just gone off again, guys. We drew this channel. So I didn't just draw that in, did I? No, that was from last time where it was said this either could be the start of it from here, or you could get one more leg down before it goes. It looks like this is the start of the recovery of it. Oil, look where oil is, guys. Major problem for inflation. But we did say no downside to oil. The best case scenario was that from there it would maybe run flat for a while, but even that's out, guys. It just kept pushing on up, which obviously is good for CAD. And if anybody that buys either oil or oil companies or whatever, and there's a major problem with oil investment, guys, that for some reason, the world's gone green, but they've gone green too soon. We still need oil. And we're going to have a major problem if we run out of oil because we're not investing now into new fields, because we're not going to be able to have the technology up and running enough to power the world without oil. There's a big problem going on there, guys. And it'll probably not affect my life too much because I'm 60 now. But in 20 years' time, the world could really have problems with energy if they don't keep investing in oil, guys. So we'll have to see. It's a no-no at the minute for pension companies, etc., to invest in oil. EuroCAD, there's that push up in the euro, guys. We were looking for a little setup to trade it short. I'm still not convinced by that. Might be a little false dawn. We'll have to see. I'll not be doing anything with it yet, but it is interesting that it only came up into there. And now it's coming off. So is there a trade back down again? Maybe just to there, guys. Possibly. And then just put a tight stop loss. Euro Oz, same thing. We were looking for it to drop. We had that spike. It has broken that top, but it hasn't broken that one yet. It's come into there. I don't trade levels, but I'm interested in them, obviously. So what I would do is let's see over the next few days, does this gradually start to fall again? And then maybe we get a trade back down into there or even into there, guys. New Zealand will be the same thing. Pushed on up a little bit more against New Zealand because New Zealand hasn't been particularly strong yet. Recently, should I say. But what structure are we getting here? Is that the end of that, that leg down, pull back, drop, and now we're on the way up? Possibly. But then you're going to have to wait for something like that if you want to trade it long again. I'm not saying that's definitely going to happen, guys, but I wouldn't be trying to trade that long until we got a correction on it anyway. Euro yen, big move back up against the yen, but we were looking for that. And what it looks like I said here was when we were in this period, I've said, listen, look how long it took it over there before it went. So we could end up in a situation like that, and then it will go. As it turned out, bang, it went. So anyone that got in there long will have had a really nice trade. Remember, this is a 4-hour time scale, guys. That's a really nice trade up there. And I would just take my profit from there and see what happens next. Look what happened the last time. There was an impulse. Look at that. That was a big, big impulse. And look what happened, guys. Right back down again. So I would not be surprised if this, listen, it could maybe get up into there and then slowly but surely back down. So the trade's gone in that, guys, and I wouldn't be hanging on for any more. Look at that one. Same against the Swiss. Yet again, we were looking for it. If we go down to the 1-hour time scale here and just look at what we were saying, guys, we got that initial impulse. We were looking for a setup to get involved in it. It came much deeper and, and it even broke the bottom, which is and there's your Elliott for you. You can explain it away. But this is when it does this, guys, don't worry about it. Only take the trade if it does what you're looking for, which would have been a nice little little zigzag, and then start to break out, and then you take it from there. As it was, it went and went and went and went and went and got down to there, came back up, and then bang, off it went. But the whole time we were looking for it to go long. But look at how long you would have had to have. You probably would have been stopped out with that one, guys, if you'd have got long there. Just take the loss because you were wrong. But bang, up it came. And even over here, when we got that, we were looking for this to break long, guys. And it took it from over there to there, which was from early December, right? It took December, January. It took 2 months, guys, for us to get that. But the important thing is that we were looking for it in the right direction. It just took its time to finally happen. And this is where you need to trade, with wide stop losses and to have patience. And the danger is that if you use too high a leverage, you get too greedy, then your timing has to be spot on, guys. Now, to be quite honest, even if you got long over here on this, you would have been stopped out either there or there. So this one wouldn't have worked out. The point I'm making is that even though, when we were coming down here, I said the next move will be up. It's up. We got it. But it took it a long time, and there were traps within it where we would have got caught out. But you'll not always get caught out like that, guys. Sometimes it'll just run flat, and you might be bored, and you're in it, and you're up, and you're down, you're up, and you're down. But eventually, bang, you get it, and that's your big trade. And that would have been a really nice trade with a 5 times or maybe even a 10 times leverage on it, guys. But I would take it. When you get something like that, take the profit and wait for another setup, guys. So what's next? Well, you're back at the stage where you've got to wait for a setup to see if it's going to go again. But it could be months before you get the next one, or it could be tomorrow. You don't know. So you have to, be careful. Maybe we end up with some sort of diagonal running up, between there and there, where it drops, and when it gets back down to there, it goes, and it drops. We'll have to keep an eye on that. Pound CAD. Yeah, came up into there, and now it's pulling back. Oil price going up. Maybe the Fed or the Bank of England going to increase interest rates. So this is maybe going to run flat, guys. So maybe what you do is we just keep an eye on it, and if it comes back down into that level, we try and trade it back up again. So you say, well, why don't we then trade it down? Because we don't know what's going to get there, guys. But if it did get to there, then maybe we trade it back up. Pound Oz. Pulling back, that looks like it wants to come down to there, and then maybe you take a trade back up there. Pound New Zealand. It's running flat at the minute. Maybe it drops down a little bit. I'd prefer to see it come down a little bit deeper, because that's been quite a big move up there, guys, and that needs to correct. That whole thing needs to correct. So that's why I've drawn such a big zone in here. This needs, and I've no idea why that would get from there to there, guys. But if it did come to there, then I would think about trading it up. Can it go long from here? Well, it can, but it's getting too well developed for me to take risks on it. So I'd let that correct. If it doesn't correct, forget about it. If it does correct, then we could maybe think about trading it up. Pound Swiss. We did say it would go long from there, but yet again, look at the path. Look how long it took, but it's there. What's the next move in this? Well, possibly long, guys, but I would wait for it to drop a bit more. If you're not in it, move your stop up so you don't lose if it comes down. If you're not in it, wait till it comes down a bit deeper, and then maybe we take a trade in there. And if it doesn't drop, then you miss it. You let the bus go. It doesn't matter. Pound euro. Well, there's that big pullback from the euro. We were looking for a pullback within this diagonal. We weren't looking for something as steep as that. But it's still within that structure, guys. The structure hasn't changed. Unless this is the end of the structure and it's going to start to go. But look at that one. That was an even bigger drawdown. And look what ended up happening over the next lot of weeks and months. Having said that, that's not something I want to be stuck in. That's just too long and laborious for my liking, guys. The Brave would maybe trade the Prime long from here, but I wouldn't jump into that. I'd wait for it to start to show some sign of abating and starting to come back up. But at the minute, I wouldn't touch it. Pound yen looks like it wants to zigzag. Looks like it wants to do that. So that would be then, maybe the break of that would be a really safe place to take it long. But it might not get there, guys, and therefore it could push on up from here. But I wouldn't be jumping in it long there. Yet again, the place to get involved in this was it broke there. Aussie yen. We're looking for that to go long. It's pushed up. It set the alarm off a few times. I'm pushing it and pushing it. Yeah, I think that'll push up long. Aussie New Zealand. Yeah, that's just going to go long. It was said from way back down here. It said it was going to go long. I can't remember what I was talking about there. Probably describing something there, guys. I certainly wasn't expecting that to happen. Oh, do you know what it is? That's the New Zealand down near the bottom of that range that the two of these trade in. And what I might have been saying was, listen, this could possibly drop a bit more, break that bottom and then go. But the trade was that way, not down. Certainly wasn't saying to anyone to trade it down. So from around here, we've been calling this long. When we got into here, I said, listen, it's going to go long, but it might just end up running long like that. Well, it did for a while. And I got bored with it. It was in. You'll hear me saying this a lot, guys. I need to stick to them longer. The problem I'm having with trading currencies at the minute is that my mind was switched last year by the stock market. And I'm not match fit, as it were. You know, you've been injured or you've been off and you've come back to play football or soccer or whatever game you play. I'm not match fit, so I'm getting a bit bored with things and I'm getting out of them. So I did get into this over here somewhere, guys. And then as it came down here, I maybe let myself get stopped out. But then I missed that. But I did say, listen, this is going to continue to go long. Now, the danger with this one was that looked like an ending diagonal in there. And if you go down here, let's go to 4 hours. Yeah, it wasn't a beautiful one, but it wasn't classic, because you would have expected that to just give you a small, small push up, and then you get a move down, and then off you go again. So it's turned out that's not what that is. And this is quite a significant move here on a 4-hour time scale, guys. Do you jump in there? I don't know. No, not today. You don't, because it's already moved today. You're going to have to wait for whatever's happening there to finish and for it to look at how it's been moving, guys. Nice little impulses. Hang around for a week and then you get another one. Hangs around for a week and then you get another one. So it's moving up, but it's long and slow. If you're going to trade it with low leverage because it will cost you money. In the end, you might only break even because you've been stuck in it that long, guys. Having said that, you could end up with an impulsive move and then you go, why didn't I just stay in it? You know, the thing is getting away from zero and getting, a stop loss in at zero and then having the patience to let it run. And then every now and again you get lucky and you catch a really big move, guys. And that's where you really make your money. Other than that, you need to be jumping in and out. And I find when you jump in and out, you end up over a period of time, you more or less break even, or else you work really hard for not a lot of return. So you need to have a bit of a longer term view on these. Aussie Swiss, looking for that to push up. Aussie Cad, I don't trade this one, guys. I don't have a handle on it. Someday I'll research it and I'll get a handle on it, but I have too much else to think about. Swiss yen, well, we said this would go long. It's been correcting. Underneath all that, I was probably saying, listen, there could be one more down, and from there would be the place to go. But it could have gone from here and it could have gone from there. As it is, if you got in there, you should be away from zero, get your stop to zero. If it drops one more time, fair enough, you'll be stopped out for zero, buy in again down there. I think that's going to go long. CAD Swiss, another one of my favourites. I think it's going to go long. I'll think about buying it anyway. And if I do buy it, I'll let you know. CAD Yen is another one that I'm thinking about trying to take long, guys. Oil prices going up. Inflation should. The only plus side for the yen would be, a move to safety, but I don't see that at the minute. I see a rotation, not a move to safety. New Zealand yen possibly pushing up long, but I'd rather take the Aussie yen than the New Zealand or even the CAD yen. New Zealand CAD, possibly, but yet again, I don't have a handle on that. New Zealand Swiss, yep, but yet again, I'd probably prefer to take the Aussie Swiss. And then I'm going to show you this one, guys. Now, I haven't looked at this in months. I took it off because I never ever traded it and I was bored with it, and I ended up took it off. This is the Chinese yuan against the dollar. These two central banks are now going in opposite directions, guys. The Fed's tightening and the Chinese Republic of China Bank, National Bank, whatever it's called, can't remember off the top of my head, they're easing. So this should move in that direction. So it's something I'm going to keep an eye on, guys, because the banks are going in opposite directions. At some point, you could well see an impulse up out of there. So I'm going to leave it on. I'm going to put an alarm on it. If that alarm goes off, I may well have a bet on this. Also, it's not beautiful, guys, but there's potentially a diagonal going on in there. From there to there. Same as Bitcoin's looking like a diagonal. Ethereum looks like a diagonal. This is potentially a diagonal here, guys. And yet again, when it did this, you can see I was talking about it back here because I've got all those structure lines on it. But somewhere you can see there, I was looking for it to break out, but it didn't. It dropped and dropped and dropped and dropped. So that's why I'm saying now potentially this is the bottom. Do you know what? Do you see with the low leverage trade on this. In other words, you're not doing it times 10 in case you're stuck in it for a long time, in case it just runs and runs and runs and you're stuck in it, it's costing you. You put a stop loss down there, guys, and get into this. And if it goes, it could be a good trade. And if you get stopped out, yeah, you lose a few dollars, guys, but that, you know, use your own trading strategy to decide where you put your stop loss, whether you give it a bit of room or whether you put it tight. I'd put it tight and then keep an eye on it. If it gets stopped out and it still runs flat, maybe get into it again. Now, it's not something I've traded, guys. But look at that move. Could you imagine if we got a move like that? That's, I mean, I don't deal in pips, guys, but I mean, that's, what the hell is that? 11%. Let's just call it, it's 11% times a 5 times leverage. It's 55%, guys. I'm writing that on. That's just maths off the top of my head. I know the maths is right. I'm just not sure if that's exactly the way it works. I think it is. Yeah, so move to 11%. If your leverage is 11, 55%, guys. That's a potentially really nice trade. But we'll talk about it again next week. We'll leave it on there and we'll talk about it next week. Okay, guys, that's long drawn out, but that's why we're doing it weekly, so you don't have to listen to me every day. Take care. I'll speak to you all again next week. Bye for now.